Hello, this is Brian Rezny, president of Rezny Wealth Management, bringing you an important update about the economy and the investment markets. Well, the inflation data that continues to come out from the December month, last part of the year, is of course dropping like a rock. I've talked about this for the last 6 months. If we look at inflation overall for the last 6 months, including December, we're actually running at an annual inflation rate of around 2.5%. So it's coming in line. These are all positives for the economy. These, in our opinion, are going to be positives for the overall equity markets. And what we're ultimately going to see this year at some point, probably the second half, is the Fed is probably going to have to reverse course from a slowing economy and bring interest rates back down again. So again, in our opinion, these again are all positives and we are positioned. We are starting to add back in the portfolio a little bit intermediate to longer term dated bonds in the portfolio for that capital appreciation when rates go down. We're going to add more to some of our technology holdings and oil. One of the things that we see happening, not only in the U.S., but really around the world, is generally speaking, a lot of consumers are in fairly decent shape. So what does that mean? Remember, the consumer is 70% of the spend in the U.S. alone, and generally speaking, the consumer continues to spend. Inventories are coming back nicely, so we're getting that supply. So if people want to buy things, that means supply is going up. Demand is still there, but we're seeing that inflation impact starting to go down. You don't want rampant inflation like we saw the last year and a half, and it is clearly rolling over as we talked well over 9 months ago on kind of a time frame issue. So again, positives for the overall economy. Expect volatility, and I always stress this to every client. Every year is not going to be up 20%. You're going to have a year where things could be down 15%. That's reality. Every year, statistically, we have about a 10% correction in most asset categories, whether that's bond, real estate, stocks. They all experience it. It's what's going to happen in the next 5 years, which we are and do expect to see decent growth throughout the world, more so in the U.S. and more so in China as China's basically come fully back online. Obviously, nobody's talking about COVID anymore. That's kind of a thing of the past. And that's really the last stumbling block really was China. And by fully reopening, what you're going to see, their economy is really going to help not only us, but the rest of the world also in a growth position. So expect volatility, expect great opportunity this year. And as always, if you have any questions about your portfolio, any concerns, if you need to schedule a phone review or an office review, please call the office to schedule. And as always, we appreciate your business, your trust, and your referrals. Keep us in mind if you're talking to anyone who needs a qualified money management firm to properly manage their money. Have a safe and profitable day.